Right, ladies and gentlemen, folks, welcome back to the class. Today we will summarize what we should do in the market and what we must not do. Do's and don'ts. Let's have a look at the do's first. Right, like I always say, number one, stick to the plan. Stick to the plan, meaning you know what I mean. When you need to stop, you stop, and when you need to take profit, you take profit. Stick to your trading plan. Basically, that's what I mean. Keep emotions out of the trading. Of course, you can be greedy and you want to stay in the trade longer and ended up losing. Just be disciplined. That's the most important thing. Be disciplined. Prepare for losses and accept them. Get out of the trade once your desired profit has been achieved. Because sometimes it does happen. It's quite easy that your target has been achieved and you're thinking, you know what, nah. I'm sure that it's going to go even higher. Yeah, it could be, but it also could go the other way around. So that's why be patient and stick to your plan. Keep researching and keep yourself up to date with the news and the current affairs, events, whatever happening. Always come before you start trading. Look at the news, look at the data, and see if there's any data coming out which is going to affect your currency pair. Accept the smaller profit instead of waiting for a big major loss. What happens sometimes, okay, you are already in a trade which is going in profit, going in your favor, but some data or news is coming out in the market and that's going to change the market. Market all of a sudden, it decide to go against you. You haven't achieved your target. For example, your target was 100 pips, yeah? But your profit at the moment is only 40 pips. So in that case, when the news comes out and you see the market is going to go against me, get out. Get out, take profit. 40 pips profit is better than losing 30 pips or 40 pips, whatever stop losses. So sometimes you have to do that. A winning trade is better than a losing trade. So anyway, there's a saying here, uh, we say in a shop, in a business, like a normal business, in a shop, they will say 20/80. What does that mean? Is 20 means that in one shop, 20% of the stock is actually rolling and making money, and the 80% of the stock is it's not dead stock, but it's a slow mover. It's a very slow mover. You can't rely on that 80%. You only rely on that 20%. So what I'm trying to do, they have to be very patient. Everything will go, but obviously you have to be patient. And some of things are faster than the others. Now, sometimes you will have good days in the trading. You probably will make 100 pips in a day, or you'll probably make only 40 pips in a day. That doesn't matter as long as you are in a profit and as long as you have achieved your target. And you might not achieve your target in some days, you might think, oh, I can't make 100 pips today. I've only made 60. All right, but 60 pips is better than losing, It's still, as long as you're in profit, you don't have to take 100 pips all the time. That's just your target. Just an example anyway. Pips is entirely up to you, how many you can take. So be patient and, just let's see now what we shouldn't really do in the market. Changing your stop loss. Now, I cannot insist more on that. Sometimes what happens is people say, you know what, the market is actually going to go and hit my stop loss. I move it a little bit lower. It might turn back. Then you move it down. That's wrong. Then what happens is it go even further down and then you move it lower. You don't want to take a loss. Yeah, you keep hoping the market will go up. Okay, it can happen. I would say 3 times out of 10, it might happen, but 7 times it will go against you. And once it's gone against you, then, you'll be losing a lot of money. So don't stay in, denial and just, losses will happen and you will have to accept them. Okay, then don't trade when the economic data is coming out, some news coming out, some NFP or GDP numbers or interest rate, or a speech is going on by some finance minister or the prime minister or whoever, whichever the news is coming in the market, that will affect the market. The market can go against you, but it can also go in your favor. But try, if you are not in trade at that time, I would say just avoid it. And then they don't ever chase the price. Let the price come to you. For example, here, I'm just, this is your support line, and the price here, your price is 1.20, but market is at the moment on 135. So let the market come. If your trade plan is, I'm going to take an entry on 120, then wait. Let the market come to you. Don't enter on 135 and hoping the market will go up from here. You know, if the market never goes up, it just goes, it swings up and down. So do not chase the price. Let the price come to you. If you decided to buy on 120, you stick to that. And when the price comes to 120, automatically you just, either if you're in front of a computer, then you buy it, or you can put a limit order there and close the computer and go home. Then do not trade on Friday, the last Friday of the month, when non-farm payroll is coming out. Non-farm payroll on our last Friday, for first 30 minutes, are mad. Basically, the market is very unpredictable, very volatile, up, down, bouncing like anything. Just stay away in a time like that. And I would say another thing, I'll advise another thing here. When the market opens in the morning, opening bell, then give it about 30 minutes before you start trading. Let the market settle down, unless you already are in trade or you have made a trading plan and the price is there and you're thinking that price will go up after reading the news or listening to the news and reading the data or something, then it's a different story. But I normally give about 15, 20 minutes calm down period and let's see which way the market's taking direction today. And then I decide to take a trade, enter there. So hopefully I would love to see my students become great traders. Okay, just control your emotions and be nice. And I wish you all the best. Thank you very much. Have a lovely day.